Hi, and welcome to the Rare Business Podcast. My name is Adrian Swinsko, and I'm a consultant, advisor, researcher, and writer on all things related to customer service and customer experience. Through this podcast, I seek out and interview CEOs, entrepreneurs, business and tech leaders, and leading thinkers about what it takes to build organizations that produce better outcomes for both customers and employees in this fast-moving modern age that we live in. If this is your first time listening to one of these interviews, then welcome, and please do dive into the archives at adrianswinsco.com, as I've now completed over 250 of these interviews in the last few years. If this is not your first time listening, then thank you for returning, and I'll aim to do a good enough job to keep you coming back week after week. Anyway, that's enough from me right now. Let's get into the interview. So, welcome to the next edition of the Rare Business Podcast. With me today, I have Chris Roark, who is the Managing Director of Accenture Strategy. Hi, Chris. How are you doing?
I'm very well. How are you?
I am splendid, sir. I'm very splendid. So, I've shortened your name to Chris, but your full name is Christopher. Is it okay to call you Chris?
It is perfect.
Fantastic. I just wanted to check. So, Chris, for the benefit of our listeners and readers, would you be so kind as to tell us a little bit about yourself and also a bit about the work that you do?
I'd be happy to. So as you noted, I'm the Managing Director with Accenture Strategy, based in Chicago. Mm-hmm. I've been in the consulting space for roughly 20 years, and most of my time has been spent working with retailers and consumer products companies, or the consumer elements of different industries such as life sciences, industrials, and so forth.
Right.
My focus is to work with management teams, and I orient around two key problems. Mm-hmm. One is focused on growth-led transformation, and so as we increasingly find the business models of Chri companies for decades are rapidly being disrupted, what does that mean? How do companies and management teams think about reinvesting in new sources of growth? And then a related notion comes in around cost-led transformation. And so as we think about what types of business strategies and business models are needed for the future, what are the operating structures and the cost structures that are required both to make that rotation and then sustain it going forward? And that's, as we'll go through the discussion today, that really underpins how we start to think about competitiveness. And we'll bring in a third character, which is trust and sustainability, to the dialogue.
Okay, that's perfect. Thank you for that. So, Chris, the thing that we wanted to talk about today is that you recently published a new piece of research, this Competitive Agility Index, which apparently for the first time can tangibly quantify how a decline in stakeholder trust impacts a company's financial performance and competitiveness. I mean, that's fascinating. So, to help us, can you kind of tell us a little bit more about sort of what you've done and how you've done it and sort of what you found?
Yes, I think you kind of have to start with how we got to the point of defining the Competitive Agility Index. And
sure.
I think as a business community, historically, we have oriented towards financial metrics. And if you're in the capital markets, you look at total shareholder return. If you're within internal management teams, you think about a broader range of figures, but all lagging in nature. And so when you think about the disruption that's occurring to companies today and the number of large corporations that are ceasing to exist over a period of a decade, whether they're being acquired or we're finding this revenue and profitability starting to shrink, we found that these lagging indicators just are not a good predictor of success. And so a number of years back, we started to contemplate, is there a different measure?
Right.
And what we came to was this notion of what companies really need is an interdependent strategy. You can't just talk about earnings per share, and you can't just talk about return on invested capital. Likewise, you can't just talk about growth. You have to talk about the intersection of those. And so that's where the notion of growth and profitability started to come together. But we found that in itself was actually incomplete. And there's a very significant shift that we've all been seeing. And it first started around this notion of sustainability and corporations being more responsible. But we feel that as digital becomes more present, and what we can explore what digital means if we want. It means very different things based on the stakeholder group. But digital increases transparency. So it's not just responsibility, it's actually trust.
Right.
And so we introduced this third character of trust. And so we started to define that what management teams and their boards really need to be thinking about is what's the competitiveness of their firm. And that's a combination of how well positioned they are for growth, how strong their profit position is both today and tomorrow, and then how do they perform as a trusted company. And the index really is a manifest of those three elements, and it's an ability to measure how a company performs. We've looked at 7,000 companies across the world. Over 4,000 data points are informing the analysis, and it allows us to say for any given firm, how do they perform against all three of the dimensions? How do those three dimensions come together? And as we start to think about the volatility, one of the dimensions, what might that mean?
So if I was to think about it, so you're talking about this idea, this competitiveness. So I think about it from a if you like a mathematical function perspective. I don't know why, but I've just kind of popped into my head. So could we kind of say that competitiveness is a function of the positioning for growth, strong financials, etc., and this trust dynamic? Would that be accurate?
You can.
Fantastic. So, but let me dig into this idea about sort of trust, because I'm really interested. It's a thing that's been coming up again and again and again in sort of various kind of guises. So can you tell me a little bit about your thinking about why trust and why now?
I think there are a handful of factors that play into why trust.
Right.
And I think the most obvious one, the one that sits on the surface, is the war for the share of wallet.
Right.
And the way that you think about your positioning in a customer or consumer's mind. But that is a very valid piece of the story, but it's very incomplete. And the reality is there are other wars that are being fought every day. There's the war for talent.
Yes.
And particularly for growth companies, whether you're in a well-developed market or a higher growth market, getting talent is a struggle. And we see companies everywhere, whether it's a large city or a smaller city, trying to explore different channels. And the reality is, when we look at today's workforce, it is not just financial compensation that motivates.
Right.
Employees have more choices than ever, and so they're making their decisions based on the companies that they associate with based on principles. And so trust for the employee is critical. Then you have trust with business partners. Increasingly, we find that firms are relying on partners to support what has historically been a fairly limited view on efficiencies, but now very much so from growth, whether it's just co-innovating on products and services and solutions, or it's thinking about new ways to get to market, or it's thinking about how to bring insights and analytics. So the role of the partner becomes increasingly important. So you think about any two firms coming together, trust is critical. And then we have increasing activist activity, and so trust in the capital markets.
Yes.
And the way that we think about the resources that are available to firms. And so trust becomes, in many ways, almost table stake as we look at competitors going forward. And while there are always going to be, blitz or disruptions in either profitability or growth, in our view, those are actions that can be corrected in many cases through very targeted interventions. The reality is trust is cultural.
Right.
It is built into the DNA of the enterprise. And so increasingly we're finding it's perhaps one of the most important topics that boards and management teams should be talking about.
Okay. And because we talked about this, the start of the conversation, how you've been able to sort of quantify this a decline in trust, how it impacts a company's financial performance and competitiveness. Can you give us an idea of the quantum of impact we're talking about, and sort of what are some of the dynamics that you've looked at in terms of to capture the measurement and impact of that?
Well, in terms of in a degree of orientation, so among the 7,000 companies, just over half, 54%, have encountered a meaningful trust event. And that's trust that is a publicly reported event that impacts any one of the dimensions of trust that we talked about across the stakeholder groups, of customers to employees to partners to the capital markets.
Sure.
And so when you look across the sample size, we're looking at 7,000 companies, we're talking about a significant portion of revenue at play. And I'll give you two examples.
Okay.
One that's very B2C specific and one that's B2B. And we won't share the names of the companies per se here. But on a business-to-consumer element of this, we have a client that we've worked with that had an issue related to trust and the public perception of the company.
Right.
And it was an event that backfired, something that went through normal course of actions. It became a bit of a PR challenge. And in the near term alone, that drove a reduction of $400 million in revenue.
Wow.
And so we say $400 million of revenue. For some companies, that's very significant. For others, it's much less. We think about the profit impact of that lost revenue. That's a very significant impact on earnings.
Yes.
And so the question becomes, as a trusted company, how quickly do you respond, or how resilient are you? And what we find is when we look at companies that have higher trust scores, they're far more resilient. Now, if we look at a B2B angle, business to consumer, I think in some ways there's a challenge in that consumers have lower switching costs, but the business to consumer companies also have a lot more heritage of dealing with events like this. I think where the challenge becomes perhaps even more significant is in the business to business world. And the reason there is there are a smaller number of customers in many cases that represent a larger portion of revenue and profitability on any individual basis. And so when we look at the business to business side, we tend to find that the impact of financials is more significant.
Right. Okay. And how does I guess in the business to consumer perspective, I guess when you're thinking about that trust, you talk about employee, you talk about customer, you talk about partners, and you also talk about the capital markets. Data and privacy and all of the security that goes around that feels like a thing that is driving a lot of the trust agenda in the business to consumer space. Is that right? Is that a big dimension within that, particularly within the business to consumer space?
It's absolutely a large dimension, and we think about where the business to consumer firms want to lead. They want to start obtaining the data and using that data, ideally to enhance the experience for the consumer. But exactly to your point, any breach of security on that data has very significant both short and long-term impacts.
Sure.
But I'll give you a different angle on the business to consumer side, and think about just the performance of a product or a service.
Yes.
And the way that the earned marketing, what is said in the social channels, starts to evolve. And there's a food company that we worked with that had a very well-established brand that the management team thought had a well-defined value proposition in the market. And they started to do some social scrubbing and understand what was really being said. A very different set of potential uses emerged. And that company was able to take that without changing the product, change the position of the product in very specific markets, and drive a higher level of connectivity or trust to that brand associated with need states. And so while there is some downside, there's also a lot of upside to proactively managing trust and thinking about how the brand's trust with specific consumer segments starts to resonate.
Yeah, absolutely. And so I guess the implication of that then is that, maybe I'll rephrase this as a question. So do you then think through your research that actually thinking about and trying to be a trustful company will increasingly become part of a winning strategy, or could become part of a winning strategy going forward?
I would strengthen the statement.
Okay.
Becoming a trusted company is an absolute requirement of having a winning strategy.
fantastic. That's great. I mean, I didn't want to kind of like to put words in your mouth, but you can't say it stronger than that. But so I'm really interested in all things sort of service, experience, engagement in those sort of spaces, particularly customer. On the customer side, but also on the employee side. I mean, what are your implications of your research for these sort of kind of domains? I mean, and it doesn't need to be just B2C, because it's also in service and experience is becoming increasingly important in the B2B space as well. So what are the implications for companies? What are the things, the lessons or the points that they should be learning?
I think from a service standpoint and an experience standpoint, there are a few points that I would raise up from the research. So first and foremost is predictability. We all have heard the statement that trust comes from having the experience, the result that you expect.
Sure.
And I think predictability is critical. And when we think about the way that firms first segment their customers and then develop the service models for those customers, I'm not sure that enough energy is going into really thinking through those choices.
Right. And
as the availability of resources to make investments is getting increasingly scarce, with the need to invest in new business models, new innovations, that segmentation and prioritization in service design is probably more important than ever.
Right.
I think there's a second piece that then starts to come into that around what is the end-to-end experience. It's no longer about price and products. It's much more so around the engagement models and the experience and the emotional connection. And so feeling a sense of emotional connectivity is more important than it's been at any point in my career, for sure.
Sure.
And I think there's a lot that we see in the B2C segment on this, but again, in the same way that I think managing the risk of trust is amplified in B2B because of the stakes, the smaller number of customers that represent a much larger portion of the revenue. I think the same is true on the experiential element of this. In the B2B world, getting deep trust in loyalty, earned loyalty, now becomes a much more important topic than it's been even 3 or 5 years ago. And we've done a lot of research around customer experience in both B2C and B2B, and that data reinforces that point. And so I think those are some of the elements that come in from a service and experience dimension of this.
I mean, I think that's absolutely right. Because Chris, it's something that there's something else that I've been kind of noticing and it's something I've been talking about for probably a couple of years now, and it's that idea, particularly in any space really, is like kind of that how companies need to get the sort of the human and tech balance right across the experience. But I think that the missing piece I've sort of noticed is that many companies haven't, as you suggest, sort of gotten to the drill down and actually ask themselves, what is our experience strategy, or what is the end-to-end experience that they want to design, and how do things kind of play out across that experience in terms of the human tech kind of mix, or human tech digital kind of mix. And how does that change for different kind of customer groups? And I think rather than things becoming kind of simpler, it's like actually it's almost it requires kind of companies to do more work to get more sophisticated and get more considered in order to deliver these the sort of experiences that they desire. But that in itself will help them to your kind of points before about predictability and emotional connection, that are more likely to allow them to do that and therefore develop the trust that is going to be part of that winning strategy.
Well, and I'll give you a great example on this that comes from the pharmaceutical space. And as medical devices, we see some similar examples of this, which is historically, I think the orientation has been around, first, a segmentation of sales and marketing, and then second, in a emphasis on the product. But the reality is we're increasingly going to more of a journey management approach. So not how do I sell a medicine or a device, but how do I manage the disease state or the medical condition more holistically.
Sure.
And that doesn't just touch the patient. It actually starts to connect the medical community with the firm that's providing the product itself, with ecosystem partners that are providing supplemental services to the patient. And you start to get to a broad ecosystem that is dramatically increasing the efficacy of the solution.
Sure.
And in the course of doing that, creating competitive advantage through greater trust.
Fantastic. So this all kind of feels kind of, I mean, I get it, and it's all kind of like it's kind of quite broad and quite high level. I mean, if we were to bring it down to almost like brass tacks, Chris, and to think about things in what are the tangible implications for organizations and leaders? I mean, what are the things that they need to start thinking about and doing differently?
I think I'll give you 5 implications that okay. I believe every management team and board of directors needs to be thinking about. So the first piece is, at the macro level, what is their competitive strategy as a firm? And when we start to look at the dimensions of growth, profitability, and trust, we bring those together. How well positioned is the firm in the competitive landscape, both in their direct competitive peer set and in the more extended peer set that they associate? Then you take that view and you start to break it down into some different elements of it that start to get very close into trust itself. The first is, where does the firm stand? And so whether they're using the competitive agility index to score them or some other measure, what is the baseline positioning on trust today? And what are the relative points of strength and weakness and the implications of both? Right. And having that objective fact base to stand against gives a very important foundation. I think the next piece of it comes into, what are the cultural linkages on trust? And I would start within the 4 walls of the firm itself. Yeah. Do employees trust the management team? Right. Where are their levels of confidence? Where are there not levels of confidence? If you look at your largest customers and partners, how much do they trust the management direction of the firm? Sure. And so starting to ask questions around not just the baseline, but where are the so what's that can be acted upon, gives a foundation then for a very actionable approach to trust, which then gets to the next element of what investments should be made in trust. What should happen near term? What should be happening longer term? One of the things that we see companies doing now is starting to invest a lot more in the analytics of trust, so they can get real-time views on trust among stakeholders, right? How it's evolving, where are there, if you break down the elements of trust, where are different pieces of the management team acting? And so it becomes part of the objectives of the management team itself. And then finally, what are the scenarios that need to be managed to proactively prevent impacts to trust? Right. And so whether that is as a management team working through scenario planning around cybersecurity or the recalls or failures of products. Yeah. Or perhaps it's thinking through different scenarios on shifts in whether it is an economic or political environment. Sure. And we see a lot of this today in the press, where at a political or governmental level, companies are being, frankly, attacked. Yes. On their positions, whether it's nationalism or whether it's the investments they're making and how they're making those investments. The political community is more charged than ever. How are companies thinking through those scenarios? How are they responding? And so what you go from is a very basic foundation of where you stand today to how do you start to think about actionable insights that can be measured in terms of how you progress through the year to eventually a very proactive scenario planning based view of approaching trust. You know what? It's refreshing to hear you talking about scenario planning. I mean, before this call, I mentioned to you that I'd worked for Shell, and Shell were leaders and big advocates for scenario planning. So it's actually kind of nice to hear. I always saw the value in it, sort of thinking far forward, outside of plans, as it were, to actually
if you like build that kind of almost like adaptability muscle, kind of further out than a 5-year plan, to so we can be a bit more conscious about what's happening and what could happen and how we would respond to it. So it's nice to hear scenario planning kind of getting back onto the table, because I think it's a not oft used sort of technique, but but I think it's a very, very valuable technique if it can be done well.
Well, and let me build on that just for a minute, and I'll bring it to life with an example. One of the companies that we work with is Accenture, has taken a very, what I think is a very effective approach to this. And they've defined scenarios that could impact trust, from the elements of cyber that we talked about before in digital to disruptions in supply, whether they are commodity input disruptions or manufacturing and distribution disruptions, to failures of products, to breaches of confidentiality. Very broad in the view, and they didn't rely on a CIO or a chief risk officer to develop the scenarios. They put the management team in the room for 2 days, and they worked through the scenarios as a group. Yeah. And then what that allowed it to happen is two things. One, it was really interesting to hear different functional stakeholders. Yes. Think about their responses. They come from different angles, and they have different concerns, and so you start to get a more holistic or integrated approach. And they actually taught the management team how to be a bit more agile. And months later, there was an incident that personally I think would have had revenue and profit impacts that are fairly significant, and yet it was addressed almost seamlessly without ever making noise internally or externally. And I think there's a muscle that gets built through that scenario planning that if you don't have that muscle when the trust event occurs, the firm is far more exposed. Absolutely, yeah. People kind of like almost like they get dug into their functions or their silos, rather than actually being a bit more systemic about the way that they deal with the issue that's in front of them. That's right. Absolutely. So, Chris, that's absolutely fascinating. I mean, but if I was to say to you, I mean, we've got this kind of 5 things, but somebody's listening to this and going, "Oh, that's fine," but that's like a big old list. That's a big old to-do list, as it were. But they're listening to this, and they are, a leader in their own firm, and they're like going, right, fine. So where should I start? I mean, what would your advice be to them? Is like, what's the first thing that they should be doing? Is it just kind of to get trust on the agenda, or what? I do believe that's probably the first thing. As a management team, are we talking about trust, and how would we define trust as a firm? Right. Because until you define trust, you really can't measure it. Fantastic. That's great. So finally, one last thing, Chris. Anything else that we've missed out that you'd like to highlight before we can sign off? No, I think we've been fairly broad in the dialogue this morning. Fantastic. So, Chris, first of all, I just want to say thank you for your time today. Congratulations on the work and bringing the sort of the trust dynamic, front and center. I mean, trust has been swirling around and in many forms for a number of years now, but what you've done is I think you've kind of grounded it in some really tangible and actionable sort of stuff that companies need to really kind of think about and address and think about kind of what it means for them and making it real from a financial and operating perspective. So congratulations on that, and just want to say, thanks very much for your time today. That's been very, very, very interesting. Excellent. Thank you for having me.
Well, that's it for another interview. I really hope you enjoyed it. Now, every time I complete one of these interviews, I learn something new, and I try and incorporate that new learning into my writing, my speaking, my workshops, and the consulting that I do for my clients. If you're interested, you can find out more about how I work with clients over at adrianswinsco.com. But one final thing before I go, please consider heading over to iTunes or whichever podcast platform you choose to use, and do leave a review. Every little helps, as they say. Anyway, that's all for now. Thank you for listening, and do listen in again. All the very best.